The backend just flagged an all-time record. U.S. investor margin debt hit 4.7% of GDP. Clearing.com. Clearing 2008. The highest it's ever been. That's the structural backdrop the whole session is running on today. We close on SignalFinder Pro's top-ranked ETF and stock. And given what the scan is reading, you'll want to see who made the cut. SPX snapped a 3-day losing streak, closed up under 1%. But don't let that fool you. The Nasdaq's weekly signal had already turned bearish the prior week and didn't recover. The SPX daily flipped bearish Monday and stayed there Tuesday. The scan picked up a junk bond divergence. Breadth is lagging while price grinds sideways. And that's the crack the backend flags before a real move. VIX isn't spiking yet, but it's in watch mode. The yield pressure sitting under that breadth failure is exactly what the macro read is built on. The 30-year Treasury yield just hit 5.16%, the highest level since the run-up to the global financial crisis. TLT broke through its support level. The dollar is holding steady as the market reprices for oil-driven inflation. Here's the structural angle. U.S. net interest expense now accounts for 20% of total tax revenues, double where it was in 2020. The bond market isn't confused. It's pricing the oil signal directly. And that's exactly what sent the energy sector to the top of today's scan. Energy's leading the scan, and the system clocked the driver. Crude oil is up roughly 80% year to date, and Strait of Hormuz supply pressure just overrode a crude inventory build this session. Oil spiked sharply on Iran tensions before pulling back. That's geopolitical, not cyclical. XLE pushed to a new session high as the sector absorbed the bid. Energy is the one area where today's macro backdrop is working as a tailwind, not a headwind. And the same geopolitical supply bid that's running oil is exactly what lit up the precious metals today. Gold and silver caught the geopolitical haven bid. GLD and SLV both moved higher on the same Hormuz supply signal that ran oil. Gold futures pressed right into a key resistance cluster. It's testing the zone, but hasn't cleared it. Copper miners held their ground despite short-term pressure. The read here is a clean haven rotation. And here's the open question. If the 30-year holds at resistance and doesn't rip higher, gold gets more room to work. But if yields break through, that's the tension. That question about where international markets are positioned is exactly what the next read answers. Emerging markets flagged a real crack today. EEM broke a key support level, and the system's reading that as EM leadership fading. Taiwan held its ground, but it's under pressure from tech sector headwinds and Middle East energy costs. Japan and Europe are getting the same squeeze. Here's the data point that puts this session in context. South Korea's market fell around 25% when its margin debt hit 1.3% of GDP and triggered forced liquidations. The US is at 4.7. That's a structural reference the scan is sitting on right now. And that same risk-off current sweeping internationals is exactly the backdrop crypto is navigating. Crypto is running a split signal right now. 5 straight sessions of spot Bitcoin ETF inflows, over $700 million of institutional money coming in. That's a real demand read from IBIT and the broader spot market. But the chart and the structural story don't fully line up here. Bitcoin is advancing on declining volume, and the weekly and monthly timeframes are still confirmed bearish. The Bollinger Bands are tightening. A large directional move is loading. The backend's flagging a divergence. Institutional flow is saying one thing, higher timeframe structure is saying another, and the Fed repricing on top of the oil move is the macro variable hanging over the whole setup. That 4.7% margin debt record is the structural backdrop 122 symbols got filtered against today. And the number one stock from this scan is still ahead. SignalFinder Pro's Best of Best runs the full universe through signal state and sector rotation filters and hands back what matches the session's structure. The breadth divergence, the yield pressure, the energy bid, the scan ingested all of it. Here's what survived. Today's top 3 sectors from the scan. Financials at number 1, healthcare at 2, real estate at 3. All 3 are flagged as lagging by the system right now. And that's not a contradiction. That's the ranking showing you where relative strength is concentrating, even inside a risk-off session. Financials holding the top slot while the broader tape is under pressure is exactly the kind of rotation signal this workflow is built to surface. The scan's number 1 ranked ETF today, UGA, the United States Gasoline Fund. It tracks front-month gasoline futures, the cleanest read on the fuel side of this energy tape, and it claimed the top ETF slot while energy led sector rotation for a second straight session. UGA closed up 0.68% on the day, consistent with the Hormuz supply bid that ran XLE. The system's signal state for UGA is watch. That's the current classification from the workflow, not a directive. Apple's holding the #1 stock slot in today's scan, AAPL, sitting at the top of the best of best output, even as it pulled back slightly on the session. The system's red on Apple right now. Setup ready, awaiting a trigger. The weekly structure has fully set up, but the 2-hour and 4-hour timeframes haven't fired confirmation yet. The scan is flagging readiness, not action. Educational context, not a directive. That margin debt record wasn't just a backdrop. It's the structural weight giving today's risk-off read its conviction. And it showed up in every layer the scan processed. The thing to watch tomorrow. Does the 30-year yield hold at resistance, or does it break through? Because if it rips higher, the risk-off signal amplifies across every asset class. Verify both UGA and AAPL live in SignalFinder Pro before drawing any conclusions. And remember, this is educational, not financial advice. Do your own homework.